Good morning. Hello, I'm Matt Brown. Welcome to Core Finance. We're joined by Mike van Dulken, who is Head of Research at Accendo Markets, and we're going to look at the dollar, a currency that, well, for most of the year has been out of favour, but that could potentially be starting to change.
Yes, so we're looking at the dollar index. It's a basket, the dollar versus a basket of currencies. It's actually around 70% versus the euro, and they're around 20 versus the pound. 20% versus the pound, the rest Japanese yen and the like. But here, what's interesting, we've seen coming out of the summer into autumn is what we call a bullish inverse head and shoulders reversal. So you can see there the two shoulders, the head in the middle. We project the height from the neckline to the top of the head and project it higher from the breakout, which could see us potentially back to the highs of late June, which would be a fair old move in the context of the dollar. That could be fueled by, well, we're already expecting another Fed rate hike by the end of the year. That's priced into a very, very high percentage, 80% or thereafter. But we could get an extra win from, concrete news on US tax reform that could be seen as fueling growth and just adding further supportive of more Fed rate hikes. And then we have Trump giving what looks to be like an apprentice-like announcement on the next Fed chair, which could indeed be someone a little bit more hawkish than the current Janet Yellen in the form of Jay Powell. Indeed, even Taylor is seen as more hawkish than she.
Powell, yeah.
So both have potential. Don't forget, he could always deliver a swerve ball and say Yellen's got another term, but I think markets aren't seeing that as a likely outcome. He wants to put his stamp on this is another chance for him to really make an impact and deliver a major change. And I think there's potential there for the dollar to move higher on the premise of a more hawkish outlook from the US central bank.
Understood. And looking at the dollar moving up, I mean, if you want to trade that, obviously buying the dollar index or maybe trading euro dollar, but away from that as well, the stronger dollar, relatively stronger dollar potentially that we could see. What are the other trades? I mean, would you be looking at gold, looking at oil, looking at certainly US stocks? Yeah,
I mean, this has been a big reason. If you look at gold, I mean, there's always perfect inverse correlation. Gold has come off its highs as the dollar's bounced from the lows, and if this trend here continues, you'd likely see gold under further pressure. Don't forget the dollar rally is also based on US optimism, and therefore a lack of demand for safe haven assets such as gold. So there's both the FX element and the appetite for risk versus safe haven. Furthermore, if this keeps moving upwards, you'd expect more pressure on the pound, which I think we'll look at afterwards, which could be a benefit for the FTSE, which is, as we saw earlier, has been rolling over as the pound's bounced, proving a bit of a hindrance.
Understood. So lots to play for going into the year end.
Indeed.
Mike, thank you very much for joining us today.